Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 14th of November. Bond carnage continues as Trump makes the dollar great again. The market moves that marked the aftermath of the US election outcome resumed during the Asian morning Monday. Investors continue to speculate that Trumponomics are likely to lead to higher inflation in the future than previously anticipated, evident by the persistent sell-off in US Treasuries and the surge in US five-year inflation expectations. As a consequence of this, market participants are also betting that the Fed may be forced to raise interest rates faster than what was previously priced in order to curb future inflation. This has fueled increased demand for the US dollar, with the dollar index reaching its highest level since January. What's more, this repricing of Fed rate hikes may be the reason behind the recent collapse in gold prices, as higher rates generally hurt the demand for the metal, given that it does not pay interest. We expect these market reactions to continue for a few more days as investors speculate the potential policies that the Trump administration may pursue. However, unless we have actual news over the nature and the size of the policies Mr. Trump wants to implement, we believe that investors' focus is likely to gradually turn back to economic data and monetary policy decisions. In this respect, Fed Chair Yellen's testimony on Thursday may snatch market attention. As for today's highlights, during the European day, the economic calendar is very light. The only noteworthy indicator we get is Eurozone's industrial production for September. We have three speakers scheduled on today's agenda: ECB President Mario Draghi, ECB Executive Board member Peter Praet, and Dallas Fed President Robert Kaplan. As for the rest of the week, on Tuesday we get UK CPI data and US retail sales both for October. On Wednesday, the UK employment data for September are due out. Both the unemployment rate and the average weekly earnings are expected to have held steady. We see the risks surrounding the unemployment rate forecast as skewed to the downside, given that the nation's services PMI for October showed that job creation accelerated to its fastest pace since April. On Thursday, we get more UK data. Retail sales for October are coming out, and the forecast is for an increase following September's stagnant print. In the US, testimony by Fed Chair Yellen before the Joint Economic Committee of Congress will take center stage. We believe that market participants will be looking for clues as to whether increased fiscal spending under the Trump administration is likely to cause the Fed to respond by accelerating the pace of future rate hikes. As for the US data, the CPI for October will be released. Finally, on Friday, we get October's CPI data from Canada as well. The headline rate is expected to have risen, while the core rate is forecast to have held steady. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.